Hello, retail traders. Glad to see you today. It's Sunday. We've got Monday off. We'll be back together here on Tuesday, and we'll be starting a short week with a long weekend. We have a lot of tension going on. We have the Ukraine crisis with Russia. Been talking about them all week long, back and forth with the SPY and the indices, and that's what I'm going to bring up today. Plus, we were talking about, I was looking at an article today about JP Morgan put this thing out. And JP Morgan economists have updated their projections for the Federal Reserve interest rate hikes. They now expect 9 consecutive rate increases to 2.25% by March 2023. I'm not sure about that. But if they're talking about, I don't know what their catalyst is. Inflation, higher inflation than what they anticipated, and I think it's a lot higher than what they anticipated. Because everything around me is going up in prices, and I mean big. I went to buy some trash bags the other day for my business. The bags used to cost me $43, around $45 for a case. I went in there Friday and they cost me $62.38. And I sat there and I argued with them. I said, "Well, are you crazy?" I said, "I've been with you for 17 years. I've not seen an increase like that." And that's not the only thing that's going up. So they think raising interest rates could solve the problem. I don't know. I think if they got to drilling oil, that might be a big help. But that goes on. So let's look at the indices. Like I said, there's a lot of fear out there. We've got Ukraine and the interest rates rising and just everything. I mean, headlines. And that's what's given the bearish control of the market right now. So let's go ahead and pull up the indices. The ones I'm talking about are the IWM, the QQQ, the SPY, and the SPX. These are the 20-day, 1-hour charts. And we did break out back down to some of the Darvis boxes that I talked about 3 weeks ago, about 4 weeks ago. So let's go ahead and pull them up individually. We'll start off with the IWM. There for the longest period, we held a support level of right around 211 with an average of right around the 217 area. So we're definitely way below that. We've had a little bitty run, and she's pulled back here last week to, I would say, a strong support area of right around the 199. So I'm just going to put that in there for right now. Put a couple lines in here, and then we'll go back to the different time frame. So I'm thinking, I got to get that right. Right around 199.36, right off the bottom of that candle and the body of that one there. The wicks and the wicks, and then the body of that. So that's an equilibrium. That next support to hold would be right down there at 197.09. Let's go to the 20-day. This is that box I was talking about down in here. And so we'd have a second support level, just a little bit higher. I'm going to bring it up just a little bit to match this right over here and this candle right in here. For the third support, that was the first one, second, and third. And if we get in real big trouble, I mean, that has to hold. This 195 area has to hold. And then you've got a little support area right around 195.18. So between 195 and 195.66. I'm expecting a little pullback and then maybe try to hold this pivot point. If not, she'll drop down to this other channel, and that's got to hold. But there's a lot more room for a pullback, and that's the IWM. Now I'm looking at these every morning. About when I hear the scanner act a little bit different, or about every hour, every half hour, I'm always constantly looking at them because I'm playing these indices right now. Now we've pulled back to the support level on the QQQ here that we did on the bottom of that Darvis box. So we're going to say low support to hold is going to be right here, 338.34. If that doesn't hold, this thing could drop on down to around 334.15, somewhere in that area. So right now that's not looking too good. It could bounce off this here 4 bottoms here like it did before. Hit it once and then bounce on back up and try to find some kind of resistance right around the 343 to break. So there's a lot of room on this one. This is definitely at the bottom of that Darvas box that I talked about here in previous videos that I've done on the indices. This is my 4th one, I think, now. So the QQQ needs to hold 338.34. If not, we could double down here to right around 334.15. And then they got the SPY. And let's look at the SPY here on the yearly. So we're getting down here to the support area that needs to hold on the SPY, and that's no lower at 428.90 something. Now we think this might go down to 420, somewhere right about down in here at this area right in here, right around 422. We've been there before. I think I did call it, can't remember. No, it wasn't this one. SPY. I thought I was thinking I called this one here at 420. It might have been something else. So that solid support that has to hold is right around 429. And that's going to be your low support. But we're going to go to the 20-day. That's what we're going to go off of right now. And that's the bottom of this Darvas box. And that's going to be no lower than, I'm thinking, probably right around 426.86 if it pulls back. Now if it has to move on up, we need to break the 9 on the 1 hour time frame. If it gets above the 9, you could have a nice run. If not, if she stays below the 9 on the 1 hour time frame, you keep going on down. And that long resistance would be, this is the pivot point right here in the Darvas box. That's this little box right in here. And we've been playing off this. We called the pullback right here, nailed it, run up. Now she's had a good 3-day pullback. I think she can come back down in here, hold support, seriously hold support, and run back up. But it's got to hold at 426.86. If not, she'll definitely drop down here to 422.33. Resistance to break 434.36. Like I said, the bears are in control. And the last one's going to be the SPX. Let's look at the yearly chart. We're getting down here to support level again. That last bottom was right there, right around 43.25.32. So that needs to hold. If not, she could run down to the next support right there. And then that third one's going to be right down here, no lower than with a strong buy at 42.58. So these are your 3 supports. Let's bring it to the 20-day and see if there's anything that I'm missing. Nope. We definitely hit the first one, the second, and the third. Resistance to break is going to be 43.74 on the SPX. So you have your 3 supports. Your first one right here at 43.25.32. The next one at 42.98.82, right around 42.99. And then that last one at 42.58.05, maybe a little bit higher. We could probably raise that up just a little bit. Maybe we'll just get right around 42.70. Put that in a red line. So that's in for the indices, all 4 of them. I'm going to come in. I'm not going to rush anything. I've got to let the market dictate how it's going to run throughout the day. My best time to trade is about first hour and a half of the day, and I'm done. I could be off at the beach. But that's it. So keep a good eye. I'm bearish, but yet we're pulling back to support level. Any kind of pullback, any kind of understanding with Russia could help us get a mini bounce. But the rates, I mean, JP Morgan's, we keep getting headlines like this, it's still going to be bearish on the market. So I wish you all a great day. We'll see you here on Tuesday. Yabba dabba doo.